You're welcome to my channel. Yeah, in this video we are going to look at specialized accounts, but we said under specialized accounts we have branch accounts, hire purchase accounts, container accounts, and then royalty accounts. Yeah, in our previous videos we looked at branch accounts and then container accounts. Then in this video we are going to look at hire purchase accounts. Yeah. So we shall first look at the meaning of hire purchase. Hire purchase is a method of financing fixed assets whereby the purchase price is paid in installments and the ownership of the asset is transferred to the purchaser after payment of the last installment. That's what we call hire purchase. Buying fixed assets in installments and transfer of the property is done upon payment of the last installment. Yeah, so let's look at the characteristics of hire purchase. First, payments are made by the hirer to the hire vendor in installments. Hirer is the person who is purchasing on hire purchase. Then hire vendor is the seller. So payments are made by the hirer to the hire vendor in installments, that is installment payment. Then the hire purchase price is always higher than the cash price. Like if you are buying something on hire purchase, they will not give it to you at the same price like someone who is paying cash. Yeah. So the hire purchase price is always higher than the cash price. It involves making a down payment for the asset by the hire purchaser. Down payment is the first installment made upon purchasing on hire purchase. Yeah, so it involves making a down payment for the asset by the hire purchaser. And every installment represents a higher charge for the use of the asset. The asset legally belongs to the buyer, into brackets the hire purchaser, when the last installment is paid. Yeah. Then the seller or the hire vendor has a right to repossess the asset in case of difficulties in obtaining the payment of any installment. If the hire purchaser fails to pay the last installments or other installments, the hire vendor can repossess back the asset. Yeah. Then usually the buyer can use the asset right after making the agreement with the hire vendor. Yeah. Then let's look at the key terms under hire purchase. The first term we have is hirer or hire purchaser. A person who buys goods or assets under hire purchase agreement is called a hirer or a hire purchaser. Then a hire vendor, a person who sells goods or assets under hire purchase agreement is called a hire vendor or a seller. Then cash price, the actual price of goods or assets charged under a normal cash sale. If someone is not buying on hire purchase, the price of that asset is what we call the cash price. Then the hire purchase price, the total amount payable for an asset under hire purchase agreement in form of down payments and other installments. The amount that you pay when you're buying on hire purchase is different from the cash price, and it's what we call the hire purchase price. Then down payment, we say down payment is the initial amount payable by the hirer at the time of entering into a hire purchase agreement. And lastly, we have a hire charge or interest. Hire charge or interest is the difference between the hire purchase price and then the cash price. Now let's look at how to determine the annual hire purchase interest. The methods that we use when determining the annual hire purchase interest. We have three methods. Yeah, the first method is straight line method. Straight line method, interest is apportioned evenly over the number of installments agreed upon. like straight line, the interest is the same for all the years. Yeah. Then accrual method, interest is charged on the outstanding balance. Accrual is the same as reducing balance method. Interest is charged on the outstanding balance of the cash price after a down payment is made. Yeah. Then sum of year digit method, where the interest is apportioned according to the digits assigned in descending order. So those are the three methods of determining the annual hire purchase interest. Then let's look at the accounting entries under hire purchase. Recording of hire purchase transactions in the books of the hire purchaser or the buyer. In recording the transactions relating to hire purchase agreements, we follow the principle of subsistence over legal form. Subsistence over legal form is where we record the economic reality of the transaction and not the legal form. It's what we follow when we are doing hire purchase. So accounts involved is in hire purchase we are buying an asset on installments, so we shall have the fixed assets account. Then there is a hire vendor who is giving you the asset on credit or on installments. Yeah, so we shall have the hire purchase creditor or hire vendor's account. Then you are paying interest by the fact that you're buying the asset on hire purchase, so we shall have the hire purchase interest account. Yeah, and then you are paying installments, down payments, yeah, all that, either by cash or by bank. So we shall have the bank account or the cash account. So the first accounting entry, is to record the fixed assets at the date of purchase or acquisition. Remember, these accounting entries are in the books of the hire purchaser. Yeah, so to record the fixed assets at the date of purchase or acquisition, remember assets are increasing and assets increase by debiting, so we debit the asset account with the cash price and then we credit the hire vendor's account. A hire vendor is a creditor and creditors increase by crediting. Yeah, so we credit the hire vendor's account with the cash price also. Then the second accounting entry is to record the down payment made. Down payment is the initial payment made upon making the agreement, the hire purchase agreement. Yes, so record the down payment made. Down payment, the fact that it's a payment, it involves either cash or bank. Yeah, so we are paying by cash, and cash reduces by crediting because it's an asset. Cash or bank are assets, and they reduce by crediting. And we are paying the hire vendor. The hire vendor is a creditor. The fact that we are paying him or her, it's reducing on the money that is demanding us. Yeah, and creditors reduce by debiting. So we debit the hire vendor's account, and then we credit cash or bank. Then the third accounting entry is to record the hire purchase interest accrued or payable. Accrued or payable, it's when you haven't paid for it. Yeah, interest is an expense and it increases by debiting. Yeah, so to record the hire purchase interest accrued, we debit the higher interest account, and when we have not paid for it, it means that the higher vendor is still demanding us. It increases on the money that is demanding from us. So the creditor is what? Increasing. Yeah, so the creditor increases by crediting. So we credit the higher purchase vendor's account, yeah, and we debit the higher interest account. Then to record the annual installment payment. Annual installment payment, it's a payment, so it involves cash or bank. Yeah, we are paying, so cash or bank they're reducing. We credit cash or bank and we debit the higher vendor's account because we are paying him. The money he or she is demanding from us is reducing. So we debit the higher vendor's account and credit bank or cash account. Then 5, for depreciation for the year on the asset acquired. Yeah, in normal accounting, depreciation, when depreciation occurs, we debit the depreciation expense account and we credit the accumulated depreciation account. Yeah, thanks for watching. We shall have an example with calculations in the next videos. Thanks for watching. Don't forget to subscribe, like, comment, share with your friends. Yeah, let's meet in my next video.